G'day. I'm going to go through interest rates. Now, there's a lot of movement around interest rates at the moment, and it's quite an interesting scenario that we're running into over the coming years, and where we're seeing obviously the three main players that are having influence on Australian interest rates at the moment are definitely the Reserve Bank of Australia. So the Reserve Bank in recent times have been concerned about obviously China slowing down. They're worried about the onset of jobs and the slowing economy in Australia. So we've seen interest rates, drifting down, and that could potentially go down further. It depends obviously what happens in China and the flow-on effect of commodity prices and jobs and the like. But then we've got APRA, which is the banking regulator in Australia, where they're wanting our banking system to be as strong as possible. So we've seen our big banks raising capital, but we've also seen them, as interest rates are going down here, we've seen them increase interest rates, particularly for home residential investment properties. So they've definitely increased interest rates there to discourage that the speculative nature of investing into properties. Now, the third one I want to mention that could have further upside to the cost of money, and this will have repercussions, is the US Federal Reserve, where a lot of the money that is borrowed to homeowners, investors around the world in Australia, a lot of that money is, for the most part, come from overseas, and a lot of that is hedged at US dollars. So since the GFC, we've seen the US bring their interest rates down to sitting at absolute zero. So to get a term deposit over there of 0.15% is not uncommon at all, or 0.5%. So their interest rates set at zero. In the short term, we're going to see a movement where this will go up. Now, so the Federal Reserve will increase interest rates as they're recovering from the recessions that they've had during the GFC, and a lot of the money that we've borrowed over here in the Australian realms has come from overseas. So the cost of borrowing from overseas is about to go up. So we've got two factors here that are going to push up borrowing rates for home mortgages and investment loans, where you've got the RBA bank concerned about the growth of the economy, and they could potentially be decreasing the official rate. So for those that have term deposits, we're going to be possibly in a low rate environment for many years to come. And then we've got this strange environment. We've got interest rates coming down for the term deposit holders, but we've got interest rates going up because of these other forces around speculative property potential bubbles. They want the banks to be stronger, so they're making them obviously profitability and balance sheet strength is important, so they've pushed up interest rates, or the banks have pushed up interest rates to discourage some of those events. And then we've got the events that are happening overseas. So the cost of money may become more expensive, and what we're getting on our cash and our term deposit rates could potentially even go down a little bit further from the very low points they are at the moment. So I hope it gives you a bit of an idea of what may well be ahead of us and is what is happening right now. But yeah, hope you enjoyed it. Thanks.